shift focus to the earnings season which is there, and Asian Paints has surged over 6% after a strong Q2 show with healthy volume growth of over 5% and sharp margin expansion. My colleague Kanishka is joining us with the earning fine print.
Well, yes, Asian Paints has reported a very strong set of numbers for the second quarter of this fiscal. It's a beat across the board, that is revenue, EBITDA, margin and profit. It's a beat across parameters, and this is largely a volume-led beat for Asian Paints. Now let's look at the financials. First up, let's talk about revenue. That's up 6.5% on a year-on-year basis, has come in at 8,514 crore rupees. That's led by healthy demand in the decorative paint segment. EBITDA, that has seen a jump of about 22% to that 1,486 crore rupees level. Margins, they have expanded more than 200 basis points this time around, coming in at 17.5%. This on the back of better product mix and cost efficiency as well. Now, if we talk about profit, very solid growth over there as well. Nearly 47% year-on-year growth in profits, coming in at 1,018 crore rupees. This was aided by the absence of last year's exceptional loss as well. Other than that, on the business front, if we talk about segments, the decorative segment, that has recorded a volume growth of 10.9%, while the international business, that saw a growth of about 9.9% on a year-on-year basis, coming in at 846 crore rupees. However, bath fittings, kitchen and white teak segments, these reported moderate declines in sales. Other than that, the company has also announced an interim dividend of 4.5 rupees per share, reflecting continued confidence in the financial performance. So yes, a very solid set coming in from Asian Paints, a beat across the platform, across the parameters, and yes, it's a volume-led beat this time around in the second quarter of this fiscal.
Thanks, Kanishka, for all those details. And now let's go across to Kostubh Pawaskar, lead analyst ICICI Direct, to listen to his views on Asian Paints and the growth of the company ahead.
EBITDA margins came in better than expectation. I think we were anticipating at 16.2%, and the 17.5% is a really good number. Need to get into more into the details, but I think we need to look into how the gross profit margins were there for this quarter, especially when the EBITDA performance looks really good. In fact, 11% volume growth is quite good, considering the fact that the monsoons were elongated. Festive period was very limited. Would like to hear more from the management what exactly drive to this growth, but I think it was much better than what we on Street were anticipating for the quarter. Important to watch out would be the commentary going ahead in terms of how the business environment would be in the domestic market.
Let's also shift focus to